So first of all, welcome everybody. Thank you so much for being here today. Today we're going to cover stocks, Bitcoin, and real estate. What's the difference? What do you do with all these different things, right? So, but let's just go ahead and dive in. So first of all, if you don't know me, my name is Agostino. Cash flow, and what I primarily do is talk about multifamily real estate. That's primarily what I do. But one thing that I also do is I also invest in some stocks. I also invest in some Bitcoin, and but it's key to understand what's going on in the markets today and see how does that impact you, primarily as a real estate investor. Earlier, we're actually talking to a person who's on right now, who is actually a real estate investor that's now looking at Bitcoin and seeing all the hoopla around it and jumping in on that. So let's go into first understanding what it is, right? So first of all, back in 2009, someone created this schematic, if you will, this design of called Bitcoin, right? And the intent of what Bitcoin is supposed to do is to disconnect the currency from government and allow people one-on-one to do transactions without government intervention of any kind. So if you can imagine something like I'm here in the States transacting with someone in Germany or in Japan. We're trading a Bitcoin back and forth, and with no government interaction, it's totally untethered. No one else has any type of hand in the pot, so to speak, to really impact that transaction. Wow, sounds like a very interesting and unique scenario. Now, as you know, of course, governments don't really like that all that much. They really don't like the fact that the Bitcoin has taken off the way it has. But of course, many people they were looking for that sort of interaction. And the thing is that when in current with Bitcoin, it became the first currency. Now there's many of them more out there right now. Bitcoin is the first, and it has been for and still it's the oldest, and it's still been the most prominent one that's been around. So the thing is that you can certainly buy Bitcoin with dollars with Bitcoin. That part is certainly easy as well. The thing is, though, is that how do you actually get Bitcoin? What is how does it actually create it? Now, back a while ago, I'd say about 10 years ago almost, when I was living in New York, a friend of mine told me about this Bitcoin stuff, and he told me that everybody's jumping on this bandwagon. Back then, Bitcoin was a couple $100, probably even less than that, and we had to he explained to me how it worked, and basically what it happens is that you have these computers, right? And people set up these computers, and the computers create these blocks. And how it creates these blocks is by solving a mathematical problem. When a mathematical problem is solved, that all the computers on the network try to solve. When that computer solves the problem, it's awarded a part of a coin. Okay, and so that's one way of getting coins. Another way to get a coin is, of course, putting your own computer up on the network and then sharing the ledger, right? So whenever I'm transacting with someone else, like I said earlier, I'm transacting with someone in Japan, for instance, right? It's recorded on a ledger, and this ledger is shared on all the computers around the world. So there's some level of transparency and some level of safety, so to speak, that is shared throughout around the entire globe. So you can actually see that this code transacted with this one. You don't know who it is, but you do know that it took place. Okay, so that gives people some level of comfort in knowing that there's some level of transparency. So back then, when I was first learning about this stuff, I'm like, well, hell, I'm going to set up a computer of my own and just go ahead and start mining my own Bitcoin. But even back then, I realized that to do that required a lot of, you have to have some knowledge to do it. You have to have some computer with some horsepower. It required a lot of energy, of course. That was 10 years ago. Today, it requires even more energy, more I guess, wherewithal to mine for Bitcoin. And that's what that term is, when you're mining for Bitcoin, when you have these computers set up. So part of the reason why you're seeing this big increase in terms of how much this coin is because it's not as available, right? The more coins that are created every day, the more coins that are created, that and because that you have a limit. The limit is 21 million coins. That is all they're able to do, right? And I think they're anticipating that they should hit the limit in 2027, I believe it is. That's when all the coins will be exhausted and they have to figure out what they do at that point. But it's like with any asset, whenever there's a scarcity, so to speak, it's gonna improve. It's gonna impact the overall of that asset, right? And of course, Bitcoin is no exception. So in that sense, we have this asset that is entirely digital, right? And like we said earlier in that brief conversation that I had, there's a high level of I guess if you want to call it unknown. It's a lot of speculation, right? And both stocks and Bitcoin share the same sort of thing. It's all based on speculation, right? And this is where things get a little hairy, right? Because you don't know if it's how long it's going to be around for. You don't know if it's going to be one of those scenarios that hang on a second here. There we go. That you don't know if how long it's going to be around for, right? It could very well fall apart. We don't know that. It's like anything else, right? And I think part of it is that when you're mining for let me see here. Let's see. So, and I want to make sure I cover everything here because there's a lot to this. Now, similar to the whole Bitcoin and everything that's around it in terms of how it's traded. Okay, again, a lot of speculation based on that. Stocks are very similar in that same sort of way. There's an exchange, the Nasdaq, NYSE. There's other many other boards that companies have their stocks on, and they're digitally traded. And depending on how people feel, if they feel that a stock is going to go up, or if there's some sort of performance and it's a constant performer and then they actually happen to perform that quarter, then great, they're rewarded by people buying their stock and it drives the stock price up. Why? Because there's going to be cash flow there. The long-term prospects of that company are good. Okay, but again, it's driven both are driven by speculation. There's a lot of speculation involved. Okay, there's a level of risk involved there. Very different than the world of real estate, right? In the world of real estate, if you own a duplex, a fourplex, or 100 unit, like some of the stuff that I own anyway, I know what my rent is going to be next month, right? I know what my income is going to be on that asset. Give or take, a couple of months, a couple of people that may not make it, versus a stock, versus a Bitcoin. You don't know. No one knows in 30 days what's going to be, what that valuation is going to be for either one of those two things, right? So that's probably one of the biggest things that you could you would be able to identify as the first key aspect here in terms of what the differences are. So what else? So Forbes actually did a pros and cons type of thing, and they actually quantified what does real estate have pros and cons wise, and what does Bitcoin and stocks have pros and cons wise, and we should go through that. So some of the pros with real estate, I just covered the first thing. It's a physical, tangible asset. It is a real asset. Most of you guys are sitting in your homes probably, or sitting in a building right now. You know that when you walk in, there's an asset there. And if you're living in an apartment building, you as well as everybody else are paying money to live in this place, right? It's a place that you need. It's shelter. It's real. It's there. Okay, that's probably the first thing. Number two, there is it appreciates. This is one of those assets that over time it appreciates. I think it appreciated since 1963. It's appreciated 4.6% year over year. So real estate generally does that in a well-located area, of course, but it generally appreciates. It goes up in value, right? Consistently. Third, tax depreciation. But because you're able to depreciate this physical asset, you can bang it up against your other passive income or your W-2 income, and it helps offset some of your taxable income. That part is absolutely huge, right? Four, leverage. There is not another asset out there where you can go with $1 million and leverage it to buy a $4 million asset. Right? You can't do that with just currencies by themselves or with a stock by itself. You can't do that. As a matter of fact, if I want to go buy Bank of America stock and I want to go get a loan from Bank of America to buy Bank of America stock, they would never give me the loan for that. So it tells you how they feel about their own their own stock, about the risk level of how of what it means to buy a stock, right? So those are some of the pros, right? What's up with the cons though? The con side of things, it's not liquid. Okay, I can't go down to the store with all this net worth that I have with this asset and go down and buy groceries with it, or I can't do that, right? Requires maintenance, right? So these assets that we own a lot of assets throughout Cleveland. They require you to make sure that they're maintained, to make sure that they are taken care of. All these different things mean it's actual work, right? And part of it is because it's an actual business. It is a real business, right? That's the thing, right? So it requires operational effort to make sure that asset is always performing, right? So let's talk about some of the pros with Bitcoin. And stocks. Now, obviously, the first and foremost, you have that liquidity, right? Liquidity is important for some people, right? You got to, in order to have that access to cash on a quick basis. When you have a stock or when you have Bitcoin, you're able to buy and sell it fairly quickly. Typically, if you sell a stock or you sell some Bitcoin, there's a time for it to settle, but usually settles in 24 hours. And if you sold off 10,000, 20,000, 100,000, whatever it is, you can have ready access to that cash fairly quickly. Okay. That's part of the biggest pro they have there. I guess with Bitcoin anyway, you're supposedly, Forbes says you can spend it in different places. I find that you really can't spend it in different places. There's some places, like when I was in California, for instance, there's places that take Bitcoin. You take your phone, you swipe it or whatever, and it would deduct the Bitcoin from your account, no problem. And in many other places, it just doesn't exist. There's no mechanism, there's no infrastructure to transact with Bitcoin. Okay, so the cons, as I touched on here a second ago, it's very, very volatile, right? Stocks are volatile. Bitcoin is volatile because it's the nature of how people are buying it, and I'll bet that anybody here who's listening right now or watching right now, they're probably if they do stocks or they do Bitcoin, I would venture to guess that someone has a window open right now in their second monitor or on their phone, and they keep it open. They're always watching it all the time. Why do you do that, right? It's volatile, right? And you're looking for those swings, and it's a roller coaster ride, right? So you're having to keep an eye on it, right? You're having to keep an eye on it because you're afraid of taking any losses with that. And that's a thing, right? When you're doing that kind of thing, it's one of the cons, right? So what do I do? Well, I primarily I invest in real estate. That's what I do, because I know that from my training and my studying and really understanding how to buy real estate and how to leverage that money that I mentioned earlier and raising capital from other folks, I'm able to put it into a physical asset that I know exists, right? That land is there, and that asset is on top of it, that house, that building or whatever it is, that parking structure, the storage facility, whatever's in front of it or on top of it, is going to be there. It's going to be there tomorrow, and it'll be there probably 10 years from now. And it'll be cash flowing the entire time that it's sitting there, right? Provided that, of course, you maintain it, you keep your tenants in there, you keep them happy, you're running it properly, right? That's the thing that I do. And I recommend that what I do too, when I'm investing in the Bitcoin thing or the stock thing, I probably have, I do have some money in there as well. And what I typically do, and what I probably recommend for most people anyway, is to keep, like, say, 5% in stocks, 5% in Bitcoin maximum, right? And the rest of it is in real estate, right? So, I mean, that's what I do anyway. 80% of my net worth is in real estate, probably more than that, actually. So just because it's what I do. I buy real estate. It's primarily what my business is. But I do own some Bitcoin too. I started, like I said earlier, I started doing the whole mining thing a long time ago, and I got some done. You know, I did do some mining, and I also bought some of that Bitcoin early on, and I do some stocks as well. I'm primarily investing in things like electric auto type scenarios, like Tesla style of businesses as well. But it's only like a small portion of it. Why? Because I don't, me personally, I don't want to sit there and sit there on the roller coaster and watch it the entire day. Right? That's primarily the reason why. It's very hard to speculate what the future is going to hold for Bitcoin or for a stock, right? Where that real estate, like I'll give an example. The Rockefeller building. I bought that building back in October. We're redeveloping it right now. I see it outside my window right over there. That building's been there for over 100 years, you know, and John D. Rockefeller built it. So what we're going to do is we're going to take that building, we're going to convert it to multifamily. We're going to put 2 floors of office in there. We're going to improve it. We're going to make it cash flow. It's going to be super. And I'll bet you guys that in 30, 40, 50 years from now, that building will still be there, right? With Bitcoin or even a stock, you don't really know. Just because Bitcoin is the first one that was created and deployed, does not necessarily mean it's going to be around in the long term. It doesn't. I mean, there are literally new digital currencies or Bitcoins, whatever you want to call them. Ethereum, what comes to mind, there's Dogecoin, there's all kinds of them that come about every single day. They go up, they go down, and they're gone, right? Every day, there's just about every day anyway, seems like it. There's a new coin that hits the market, and then people jump on, they jump off, right? It's all based on speculation. And stocks is the same way too. The same companies that are around on the in the Russell 500, for instance, from like 100 years ago, do not exist today, or many of them don't exist today. And it tells you that companies, they have a cycle as well, right? Maybe they're acquired, maybe they go out of business, whatever the case may be. But with real estate, you have something tangible, and it's there, and it's been there for a long period of time. And most importantly is that it cash flows. If you're putting your money into a piece of cash flowing asset like real estate, for instance, right? That income you're getting from that real estate is not prone to the same level of taxes as your W-2 income. Most people are not even aware of this, right? It's not taxed at the same level. With passive income is taxed at a different rate than active income, meaning your W-2 income. That part by itself is huge, and real estate will give that to you, right? Where the stocks, yeah, I guess you can get a dividend from that, right? But it's typically very small, and you don't really know what it's going to be. So you have that, but with crypto, you just don't know. You don't know if you're going to get, well, you don't know if it's going to go up, and if you sell it, it's the only way you're going to get some sort of income. And again, when you sell it, you're going to get tax capital gains on that too, right? So like I said, what I do is it's like a portfolio, and I self-manage, and I encourage most people to self-manage their stuff, right? Meaning, buy real estate, do some stocks, do some Bitcoin, stay active and understand where your money is and what it's doing. Because I think one of the biggest mistakes that people have made, and myself included, is that when I was young, I just turned my money over to Wall Street and let them run it. I was kind of like a hands-off type of guy, and I just do the job scenario type thing. I think that if the people listening right now are actively engaged with what's going on with your money, you're going to be far better for it, because you'll be able to run your portfolio the way you want to run your portfolio. So anyway, that's I've been talking for a while now, guys. Do you guys have one other thing too? I will say this. What does the future hold? So there are many people that NASDAQ, for instance, NASDAQ says that by 2027, so by then, they're speculating that one Bitcoin is going to be worth $110,000. Right, that's an article that just came out. Yahoo Finance predicts a crash sometime in 2021. I mean, it's kind of like, again, it's all speculation. Right? That is probably the key takeaway here, right? Where, again, let's put this into real estate perspective now. Are we in a bubble? Right now? Well, I mean, rates are super low. Inventory is at a minimum, and it almost doesn't even matter where you guys are calling in from right now, who's watching us from wherever they are. I'll venture to guess that it's tough to find a good real estate deal wherever you are. So across the country, everybody says it's like everybody's going to say the same thing. There's not a whole lot of inventory, right? But if there is a bubble, all right, even if it pops, that value of that asset, let's say that value of the asset goes from $1 million to, we'll say 600,000. All right. That rental income still will usually stay the same. Maybe it's a little bit lower, but that rental income will keep on coming in no matter what. As long as you're treating the property well, you're treating the tenants well, you're doing what you need to do to run that business, right? Two different models. Stocks are the same way as Bitcoin, right? In terms of the bubble, right? Right now, the stock market's going crazy too, right? There's all this amped up, all this pent up energy going into the stock market. So again, it all depends on what you're looking to do. And like I said before, by creating taking a portfolio approach and putting some money into into some crypto, put some money into stocks, keep an eye on it, don't obsess over it. But if you put your money into something that's a little solid, like real estate, for instance, cash flowing real estate, get that cash flow coming in while maybe you're working a W-2 job. Sure, get that in there too, right? Take that depreciation as well. You get to use that to your advantage, right? So it's absolutely huge if you do it that way. So I've been talking for what, about half an hour now. So any questions, any comments? I welcome questions, by the way. Anyone? No? Can anybody hear me?
For real estate, is there a particular state that you would recommend being a better investment than others?
Wow. So what I always say is follow the trends. Got to follow the trends, right? And what that means is that look at where people are going, right? Right now, Florida and Texas are where everyone is running to, and for a variety of different reasons. Texas, of course, has been on fire now for a long time. A lot of development taking place out there. Florida, however, is a little different. Florida has Florida's been super busy, even leading up to the March of 2020 with all the coronavirus stuff. But now it's on fire as well. So it's been less than a year, and it's been absolutely crazy. I was actually just down in Florida. I just got back to Cleveland here about just yesterday, and I was there for about five weeks, and just to research the market, just to look for assets, to meet brokers, all that fun stuff. And to find assets is tough to do. To also to build assets is probably the bigger opportunity, right? As far as development is concerned, right? So the same rules apply in any market. Like get to know the brokers. They're the ones. They are the key to your deals, in my opinion, anyway. But I like Florida. Of course, I still love Ohio. I'm still here. I'm going to continue buying here just because I have infrastructure here, right? Another thing that I recommend, and I've recommended on previous shows as well, is that to buy where you know, okay? And when you do buy in quantity in one place. All right, that's just what I recommend. I go counter to what many other folks do, where everything that we do, like I'll pick a market and I'll buy like 2,000 units in that market, 3,000 units in that one market. And then I'll pick the next market and I'll do the same thing there. And then I'll pick the next market and do the same thing there. And I'll grow each one, right? But I'll pick one and I'll grow it. Why do we do that? Well, because it takes a lot of effort, and many people underestimate the amount of effort it takes to build a strong team. When you build a strong team in a given market, and when I say team, brokers, property managers, inspectors, contractors, attorneys, all that fun stuff, you're able to get some scale, right? And more importantly, your property manager is not going to steal from you. Super important. Super important. And I don't mean steal like they're going to take money out of the rent and put in their pocket. I'm saying that they're not going to, if you have say only 100 units in North Carolina and you live in California, you're not going to come up with this thing where all of a sudden they're collecting, they're maybe hanging on to the late fees or something like that, or they're not doing what they're supposed to be doing to run the asset optimally because you have your 100 units, but someone else in that area has got 2,000 units and they're servicing them better than they're servicing you. Not because they're jerks, but that's their bread and butter, right? So that's probably the best advice I can give. Is I love Ohio, like I said. Florida, Texas is the usual suspects, but I'm thinking anywhere in the southern states is people are just are running for the doors down there. Definitely.
That's good to know. Now, is it difficult for you to invest in other states if you're not presently there, or you feel confident when you have a good team?
Yeah, that's a very good question. So I feel confident when I have a good team. Of course, that's why, say for instance, here in Cleveland, right? I just got another 79 unit deal under contract. I'm waiting to hear back on another. It's a $35 million deal, huge deal for us. That'll be a big one for us. All of it is managed with the same property management group, all of it. The entire portfolio, right? Those two plus others that we own in this market. And what I did was I leveraged this network. So when I went down to Florida, I could network down there, right? So I met another property management company down there. Great group of people. They're very trustworthy. They've been in the business for a long time. I am, So I can go out there and I can find assets, locate them, and then I plan on traveling back and forth between here and Florida to keep an eye on things. Just because, like I said, the Rockefeller building is going to be 436 units by itself, just that one deal. And it's all development. There's a lot of work to do there, right? So I need to be here for that. But for others, here's the thing. there's many guys out there that might be working a full-time job. Maybe you're developers at Microsoft or at Facebook, or you're working in education, or maybe you're attorneys, or whatever the case may be. The thing is, though, is that to do this type of work in terms of real estate requires a whole lot of focus, Like I'm literally interacting with brokers or lenders or some of these folks at every single day for hours most times, right? It requires time. So for many people that want to get in on the business and they want to say they want to learn the business, maybe they just want to invest and do something along those lines. They could invest as a passive investor, as a limited partner, right? So as a limited partner, the great thing about it is that you can piggyback on a deal that's already existing. You don't have to do all the hard work because someone else is already, a competent person is already there working on the asset. They've already done all the legwork. They found the property. They got great debt. They're raising the money. They have the operators in place. They have everything they need to run the property. All you're doing is bringing the money, and then you're getting the checks. That's your job as a limited partner, right? I mean, it's a great way to do it. And at least to start off anyway. I've had many students that I do coaching as well. Many of my students end up investing with me, and to preempt them to get them into deals too. So I never asked them to, they just went ahead and did it anyway. So that's another way to get into deals and also become a little familiar with those remote markets. So if somebody would say wanted to invest in a place like Cleveland, most people reach out to me because they know that I know the market. Right. So they'll say, hey, I'm interested in looking at this deal in Cleveland. What do you think about it? That kind of thing. Right. So that is another way to do it right there.
Great. Thank you so much. I'm one with a lot of questions.
Yeah, that's fine. Ask away.
Okay, so I reside in California, born and raised Southern California my whole life. So all of my real estate investments are here. I've been looking into other states as well, New York in particular. What do you think about investing in New York? Maybe not right now, but if the market continues to go down, and you can capture an amazing deal, what are your thoughts on New York?
You know, I so here's the thing with New York. I thought about it as well, believe it or not. It crossed my mind, but I would never do it. The main issue, having lived in New York, I lived in New York City for some time, and outside of New York too, in upstate. The seemingly could be an opportunity there, right? It seems like there could be. The main issue, though, is that places like Seattle, Washington, or California, or New York, they're at the forefront of this big push to for tenant law, and that's probably as an owner, as a landlord, you don't want to be put in that situation, right? Because they can easily have someone live in your property for up to a year, never pay any rent. You're paying the rent basically in terms of the mortgage, and you never get any money for it. And when you do finally evict them, you'll never get that money ever again. That's a common occurrence. That was a common occurrence before all this COVID stuff, so that's why it's like, I'll look at some deals and I'll look at them like, that may not be a bad deal, but I'm like, yeah, but it's like if someone decides to change the law and become even more tenant friendly than they already are, then I'm going to be in trouble with my lender and my investors. And I'm just not big on that, but keep in mind though, there's two types of markets. There's cash flow markets and appreciation markets. All right. So a cash flow market is much of what we see in the Midwest, places like, Indianapolis or Cleveland or Columbus. Well, less Columbus, more like places like Cleveland or Toledo, places like that, where you buy an asset and it's steady cash flow every month. The cost of the price of the asset, it's not going to see high fluctuation. It isn't like it's going to grow like crazy, like in some of these other places, but it's going to grow over time, but it's the cash flow that you're looking for, right? So you have cash flow markets, then you have appreciation markets. What's an appreciation market? Like places like New York, Chicago, Florida has now become an appreciation market. And what does that mean? That means that the driver behind everybody jumping in is just because it's the demand. People just want to live there, right? It's not based off of cash flow, right? It's not based off of cash flow. Here in Cleveland, the price is based on cash flow. In Florida, it's less on cash flow, more on demand. It's going to have a mix of those two. So getting back to the discussion of like stocks and Bitcoin and real estate, within the world of real estate, if you pull that out for a second, what happens in the world of real estate? I personally like the idea of having cash flowing assets, appreciation assets, maybe some hotel, we have some development, we have some triple net, we're doing some of that as well, right? But if we're talking directly, New York, I personally don't like New York. Having lived there, having seen what's gone on, having seen the events of this past summer, especially, like I said, I looked at it. I'm not a big fan of what's happening right now, and I would much rather. That's why I'm focused right now on like places like Florida, for instance, where I'm all for treating people very, very well. We treat our tenants very, very, very well. In my opinion, anyway. We give them a great place to live. Our costs are very reasonable. We don't rip people off or anything else like that. And that's the only way you're able to scale and grow your business. We have well over 1,000 units at this point, not including the Rockefeller. So the reason why we've been able to do that is because we run our business very, very well. So the last thing I want is to have the government involved with my business and telling me what my rents should be, which they will in New York, or telling me that I need to have someone live there for 6 months rent free, which they will do in New York. Things like that. Just not a fan of that. That's all.
Oh, great information. Thank you so much. I mean, yeah, you don't really always look at every aspect of what's going on. You know what I mean? So it's really good to know. We are definitely getting a lot more of that in California. For that reason, I'm not investing in Los Angeles County at the time. Orange County has yet to been touched, but it's just a matter of time. Like we see it coming. Your thoughts, sorry, one more question. Your thoughts on vacation rentals. Do you, that's where a bulk of my money is currently, and that's where I'm still currently looking to invest, only because it's been amazing for me for the last 4 years. What are your thoughts on vacation rentals, and do you have any money invested in vacation rentals?
That's an interesting question too. I think many people, when all this COVID stuff really hit, right? When all this COVID stuff hit, many people got slaughtered because they were heavy on vacation rentals, and for those that aren't familiar with vacation rentals, you're talking like Airbnb, VRBO, like all those types of places where people can go online and stay at your house for X amount of days for, X amount of money, right? Those people that were heavy on that line of business got killed. Many of them lost their houses. There's a company actually, they were gonna buy, or rather rent out an entire floor from us at the Rockefeller. They're gonna rent out an entire floor. This group, I think they're called Ask Alfred or something like that, or Alfred or something like that. They're gone. They went out of business. They're shut down. This is a business that had, I think they had $1 billion valuation or some ridiculousness, and they had activity in every major city. And I think 3 or 4 months later, they're out of business. They're gone, just gone, right? So what does that mean? That means, like I said, again, you pull out that real estate portfolio, and you open it up and you look at it, right? You have some cash flowing assets. You have some triple net, maybe you have some appreciating assets. You have some development in there. Vacation rentals. I mean, I currently don't have any vacation rentals. I did speak to Airbnb. They expressed interest in possibly taking some of the vacant units that we have, and then they basically run it. So it's very similar. I'm sure some of you guys out there have heard of these gurus out there that sell these programs to teach you how to be the middleman between, say, a person in their house and someone looking to rent it. So you go in there, you manage it, you clean it, you make sure that it runs properly. Well, Airbnb is getting into that business too now, or they have been in that business. So we consider doing that as well, but our units don't stay empty enough, or long enough rather, for us to even consider doing that. So, like I said, I'm not totally against it. I'm just saying, sure, go ahead and do it. It works out great if you're able to run it and have someone else run it. I guess it depends on what you're personally wanting to do. Because if you're looking to do it on your own, then you're just creating another job for yourself in terms of cleaning it and making sure that it's maintained and all that fun stuff. But if you hand it off to a group, a management company, great, yeah, have at it. Just do that. Just be aware though. One of the key things to be aware of is that some lenders will not look at that income as real income. Meaning, let's say for instance, I have a duplex or fourplex, okay, and I'm Airbnb all 4 units all day long. And then the market goes up, the assets appreciated, and now I want to pull some money out so I can do something else with it, right? Well, I'm going to go to the lender, and the lender is going to ask me. They're going to say, "Okay, great, you have some leases for me," and I'm going to be like, "Well, no, I don't have any leases." And they're going to be like, "Oh, well, okay, well, you need some leases, so what are you going to do?" Well, I have this Airbnb stuff. Some lenders will be like, "Well, if you don't have a lease, we're not going to refi this thing." Right. So that's the caveat when it comes to the whole thing with Airbnb or anything else like that. You want to make sure that if you're going to play that, if you're going to play that run that play there, you want to make sure that you can actually get away with it with the lender. Like plan it up front if that's what your overall end goal is to do, or just don't put a heavy reliance. In my opinion anyway, on Airbnb or the short-term rentals. But short-term rentals, no, it's a great business. I mean, the people made a killing on it. It's I personally would not overload on all that stuff. That's all.
Wonderful. Thank you so much. I really appreciate all your information.
You bet. Does anybody else have any questions at all?
I have a question.
Yes.
Hi, so I'm fairly new into investing. I'm a realtor here in Los Angeles, California. I've been looking into trying to invest in Florida, but I don't know where exactly to start as far as finding investors to piggyback off of. Just because it's so new, I don't even know where I would start. Is there any platforms where investors that would want like smaller investments to join where I could find any?
There's Facebook, of course, is probably the best place for it. And usually going to meetups and getting to know people is another best way to do it. I think what you're going to find is there's a lot of people investing. Like there's GPs like me. So if you're not familiar with it, there's the GP, the general partners, and the LP, the limited partners. And the general partners, guys like me, and I'll have my partners that come along with me, and then we'll go and find an asset to invest in, and then we'll call on people like you and say, "Hey, do you want to invest in this deal?" And then you might say yes, or you might say no, or whatever the case may be. The thing is, though, is that there's plenty of people out there, a lot of people out there. You have to have a level of comfort with that person and with that deal. That's probably the best advice I can give you, because right now there's tons of people out there that do deals. The key thing to understand is, are they, how long they've been doing it for? Are they, do you believe what they're saying? If someone says to you, oh yeah, you know what, I'm going to give you a 50% return in 1 year. It's like, yeah, no, you're not. It's and if that's how they lead, then that's a problem, right? So there's certain clues, right? But I'd say that most of the more sophisticated people like me, we know what to say to people and really help them build their wealth while investing in the asset and helping the whole team at large, if that makes any sense, right? So yeah, that's part of it. You have to have a good comfort level with the individual and the asset that you're investing in, right? Like if I'm telling you about a mall, like maybe, hey, do you want to invest in this mall? And you'd be like, well, I don't want to invest in malls. Forget it. And you'd have a good reason not to invest in malls right now, because I personally wouldn't do it. But you get my drift, right? It's like you have to be comfortable with the person and the asset that they're investing in. So right now we're looking at multifamily down there. As a matter of fact, just before this call, I had a meeting, or rather I had a call with a broker down there who's got a new development that is partially completed. And for whatever reason, the builder stopped. I don't know why. I don't know what happened. And I can guess what happened is that typically if it's a builder that's taken the project on themselves, they didn't raise enough money to finish the project. That happens a lot, right? So they either didn't raise enough money to finish it, or they were counting on a lender to pull through and they didn't. That kind of stuff happens quite a bit if you don't lock that stuff up, right? So that could be a deal that maybe I'll pick up and with my partners, and then we'll try to round up the cash for that, right? So yeah, but of course, if you're ever interested, let me know. We can send out mailers and flyers, and we can let you know what's going on. And of course, if you go to bulletproofcashflow.com and the YouTube channel, we talk about, I have over 300 videos there, more than that. I don't even know how many are on there, like podcast videos. I explain all kinds of stuff on multifamily specifically, but we also talk about it. I've interviewed people on everything from self-storage to land to single family homes. I've interviewed best-selling authors, New York Times best-selling authors. I mean, all kinds of great people, great interviews out there for you to check out as well. So yeah, definitely check that out.
Thank you. Can I just drop my email on the chat, or what's the easiest way?
Just send it over privately. Send it over privately. So, unless you want everybody, like I think there's like 50 people on or something.
Oh, okay. Thank you so much. I appreciate it.
Okay, I see a question here. What are you using for Bitcoin mining? So from a technical perspective, well, I don't want to go too technical, but I will say that these days you need to have a powerful GPU. It's a graphics processing unit. The software is easy. It's all open source stuff. You can probably just download it from anywhere, right? But back in the day, a long time ago, like we're talking like I said, like 15 or not 15, but 10 years ago or so, you could have just gotten away with just using a regular old computer or a bunch of regular old computers and just churn away and do that. Nowadays, you need like specialized hardware. That specialized hardware is not cheap. I mean, it's expensive stuff, right? But now they're using optimized graphics processing units to mine this Bitcoin mining. And like I said before, think of it like this: there's a formula that's sent out to all the computers, and whoever can solve that formula first gets that fraction of the coin, right? So now, if you are interested, let me know. Leave a message in the comment. I think I have someone that sells this type of equipment, right? But I can pass your name along to them. You can ask them if, or you can negotiate something with them, and maybe you can pick up some stuff if you really want to build something around this. I mean, unless you're really techie. Like I used to be really techie. I gave it all up when I moved into real estate. I would just buy it, honestly. But unless you really want to do it and really invest the money, because keep in mind, when you're putting one of these systems together, okay, you're buying the hardware. You got to have a Mac Daddy, like really good setup to do it for computer wise. Then you have to have the GPUs, and then you have to probably have a lot of GPUs, because keep in mind, okay, you sitting in your apartment right now, you're going to set up one server. Okay. There's people that have like entire server farms running with tons of these GPUs mining all day and night for this stuff, right? Meanwhile, you have your one computer plugged into the socket, the electricity that you're paying to try to mine all this stuff, right? So it's kind of like, I don't know that I would do that. Again, I would probably just invest in it, just buy it and watch it, and keep an eye on it. That's personally what I would do these days. I think back like maybe 10 years ago, whatever, I probably would have been the guy to build out the server farm and did all that, and but I just wasn't in that state of mind that back then. But unless you plan on doing something really, really big, that's just what I would do. Yeah, I wouldn't do it that way. Yeah, that's. Does anybody else have any other questions? All right, well, good. Well, hey guys, thanks for tuning in. I greatly appreciate it. We're gonna have this thing up on this video up on YouTube, and we'll send out a message to everybody and let them know that it's out there. Okay, so if you want to replay, check it out. Thank you very, very much. Appreciate it, and take care, guys.
Oh, I'm sorry. I have another question for you.
Yeah. Go ahead.
Yeah. So in terms of like syndication, can for a person who are basically just, I guess you would say, a beginner, but would love to get into multifamily real estate and actually just get into like syndication. What's your advice in terms of moving into that direction?
There's three things you need to know. And I learned these three things just from the people that I'm coaching, right? This is how I know this, the people that I'm coaching, and they have the desire in their heart that they want to do this. And it's these three things that they need to be successful. Number one is the mindset. And I know it sounds all foo-foo and crazy, whatever, mindset. Yeah. Right. I used to be the same way. I used to be like, yeah, whatever, mindset. It's super important that you have, like, say, the vision board, right? I have a vision board. It's right there on the wall, right? I have a vision board with what I want my future to look like, right? And I reinforce that vision board with my daily goals. I write them out every single day, right? And I reinforce. I'm programming myself with what I want my future to look like. Okay, I believe in it so much that we have a show, Bulletproof Mindset, that I'm interviewing like the top people, and I'm interviewing athletes. I'm interviewing published authors. I'm interviewing people that would talk about the science of mindset. Super, super, super important. Okay, that's number one. Number two, capital raising, i.e., sales and marketing. Many of the folks that want to get into it, maybe they have the right mindset. Maybe they're already doing, what needs to be done to, reinforce their vision board and to plan out their future with what they want, to see with clarity what they want, which is important, right? Maybe they're doing that. But one thing they're not doing is they're not improving their sales and marketing chops, right? They're not, let's say, practicing their pitch. They're not talking to the right people to get them in front of people that have capital. Their marketing just doesn't work, meaning maybe they're putting up pictures on Facebook of them drinking with their buddies and stuff like that. I have nothing against drinking or anything else like that, but there's certain things that you don't want to project to the world, right? And that's marketing, because everyone's got a personal brand, as an example, right? So that's the second thing. And on the show, we also have the Ultimate Capital Raising Podcast. And I talk to people that work in sales and marketing, that are sales and marketing experts, right? And I talk to people that are experts at that, and I share that information with you guys. And then the third thing, and it's very, very important, is real estate, right? Knowing the language of real estate. In this business, understanding what an NOI is, what a cap rate is, what gross receipts are, all these different things is super important. Because when you're talking to a broker, if you don't say the right thing or a certain way, if you're not projecting that you are a closer, they will not do business with you. They just won't. They'll hang up the phone on you. They'll laugh at you and hang up the phone. That's what they'll do. Not because it's you, but because they get hundreds. Some of these guys get hundreds of phone calls a day from people that want to get in. Hey, I just saw this 100-unit property. No, they're not going to sell it to you. They're going to sell it to someone they know is going to close, right? So how do you bridge that gap? Knowledge, right? So I got the podcast that we do. If you go to the website, if you go to bulletproofcashflow.com, right now, you could, you'll see a little pop-up. You can download, there's some free ebooks there, right? So how to talk to brokers and how to raise capital, right? that's free. Go there, you can download it. Just put your email, and it'll email you a link. So check that out as well, right? That's a good place to start. But those three things, I think that's at least a good starting point anyway. And you know what though, if you're still in the learning phases, one way to do it is to put some money down, meaning go ahead and invest in a deal. Put down 25, 30 grand, 40 grand, something like that, depending on what that minimum is on an asset, and become an actual investor. Because when you do that, when now you can say, I am a real estate investor, you can call somebody, you can say, I invest in real estate. I'm a real estate investor, right? I mean, that's how I did it anyway, right? That's how I did it. So it was important for me to actually walk the walk before I got started anyway. So that's just my advice.
Yeah, no, thanks for that. I definitely appreciate it. Now, it's one, the last thing that you mentioned, basically, put skin in the game. But it's one of those things when because I'm also here in Orange County, California. So anything here, it's quite pricey, as you know.
Yeah.
So I've been looking at, different regions that doesn't have as great price range as Orange County. So in terms of where you have, was it the chicken or the egg? Do you go out and have a deal together and then try to get people with, or try to syndicate that deal? Or do you syndicate that deal first, meaning that you have, partners in your back pocket, and then have to go out and trying to find a property? I mean, what are your thoughts on that?
Oh, okay. So here's how I handle it. Here's how I do it. Now I know my brokers here in this market. As I said, I know that the top brokers here in Cleveland, and I have a reputation to close, right? Which is important because I'm the one that usually gets the deals, right? Before anybody else hears about it, I'm usually the first one they call. And you'll see that there's brokers will have different tiers of people. Like first to have here's the broker, and then there's the first level of client, then the second level of client, then the third level of client, then there's everyone else. Okay, so you want to always be in the inside circle. That's where I'm at with most of these guys, right? I'm usually one of the first guys that they call about the deal, or the first guy, right? So why I'm saying that is because I get access to the first level deals. If you're an out-of-state guy coming into a market and you have it and someone, oh yeah, here's the deal for you. Chances are that person has either done this already, has already marketed to the inside people. They don't want it. Second level, they don't want it. Third level, they don't want it. Now you're coming in over here. So if these three levels didn't want it, and now you want it, you got to be very, very careful as to why always ask why they're pitching it to you. Always. All right. So with that out of the way, what I typically do when I do that is, depending on if it's multifamily, which is primarily what we're buying these days. This deal that we just got under contract here recently is a good example. I already have an idea where the lender is going to be coming from. I already know that I'm going to be a partner with Meridian. They're going to do it, and I've already done, between my partner and I, about $100 million in transaction volume just last year alone, right? So we did a lot of volume with these guys. I know I'm not going to have any issues with the financing. On the equity side, meaning the money we raise from investors, we also have an idea who's going to invest. We know roughly that, we know for the raise, I think on that deal, it's only I think it's 1.8 million or something like that. It's not a big raise. It's a very small raise. But we know that we can raise that money fairly easily from our network of investors, right? Typically, we get oversubscribed, actually. So we have so many people that want to get in on these deals that we have too much, have to turn people away. That happens a lot, actually. So, but that's generally what we do, right? And then once we know for sure how the deal's going to work, we lock it up, and then we propagate it to the network, and many investors got started and they still do today. They get started with just investing passively in a deal. That's how they start, right? So they want to jump in a deal. It's a good cash flowing asset, and that's what they do. And they'll invest alongside with us, and they get on a deal that way. Being a GP, if that's what you're asking, is not all fun and games. I'll tell you that. It's work. It's work, right? And you almost want to be, at least, or have someone that's local there working on the asset, 100%, always. So hope that answers your question.
Yeah, no. Thank you so much. Yeah, I mean, it's with anything, it's like, and I mean, you have to find what you're passionate about. So being a GP, I'm quite sure, as it sounds to me, you're pretty passionate about, you're pretty passionate about real estate and investing. So the work is fun as long as you're super passionate about it. I mean, it's not work if you're passionate about it, right?
I think Alan Nation, he was a very wise man, published author. He once said, do what you love as a hobby, but for a living, do what you like. Because because if you're doing what you like and it becomes a job, then you won't like it anymore. So I really do enjoy real estate. I enjoy it immensely. I really do. And it's one of those things that has helped. It has helped me personally. It's made money for my investors, and we all have fun doing it too, right? Which is the great thing, And but I think you hit the nail on the head, though, is that for me, when I first started in this business, there was no plan B. I didn't have like, well, if I don't make it doing this, I guess I'll go back to corporate America. That wasn't even an option. And you almost want to align with someone like that. It's kind of like if you're going to get into it, if you're needed some backup because you're going to be put in a situation of some kind, you want to have someone that's going to be right next to you and knows what they're doing, as opposed to someone that doesn't, right? That's what you want. That's what you want. So, and someone that's going to definitely be passionate and be educated in what's going on. So, yeah.
No,
Well,
awesome. Thank you so much. I mean, is there any way that we can connect?
Yeah, absolutely. So if you go to Bulletproof Cashflow, bulletproofcashflow.com, of course, that's one way to do it. I think if you've signed up with Meetup, right? If you reply to any of those emails, they come right back to me. So,
Okay.
Yeah, it always works that way. Yeah.
Awesome. Thank you so much for sharing, man. I appreciate it.
All right, guys. Well, thank you guys for tuning in. I greatly appreciate it. All right. Don't forget, this will be up on YouTube here soon. So when it is there, take a look at it again. Subscribe. It always helps us out tremendously when you do. Okay. Thank you guys so much. All right. Take care. Okay.
Thank you.
See you next week.
Thank you.
All right. Bye.